Hey there, everybody. Thomas with Basecamp Trading. It is Monday, March 9th, and we're going to take a look here at the stock market. It's a wild day today, and specifically we're going to discuss limit moves and what those are so you understand, because most people seems like don't know what limits are and how they work. But before we get started here, make sure you hit that like button and subscribe if you haven't already done so. All right, so today we saw a real big sell-off. We gapped down on Sunday night and dropped through the floor, and then over the night session we hit the limit. Okay, so there's a circuit breaker or a limit on how far the S&P or the stock market's allowed to move before they say, okay, you can't go past this level, and that's the limit. And when you hit the limit and stay on the limit, it's called being locked limit. So in this case right here, this was where we got locked limit, right around 28.20 last night. And that's why you can see on this 5-minute price chart how we stayed locked limit all night long into the morning. And then at 9:30 a.m. when the stock market opens, so the initial limit, overnight limit, is 5%. Then they increase it to 7% at the open. And if you hit that 7% level, which is what we did here, we gapped down right to limit and stopped at 7%. They paused trading for 15 minutes, which is what we did here. And they increased the limit 6% more up to 13%. And then if it hits 13% before the end of the day, then they pause trading, or before like 3:30, I believe it is, then they pause trading again for 15 more minutes. And then the maximum move it can have on a single trading day before they stop trading for the day is a 20% move. Okay, and that's to keep the market from running away. And it kind of makes people stop and think about what they're doing and keeps the market just from falling through the floor. All right, so in this case, we went limit, locked limit over the night session, then gapped limit again, and then gapped down even more. Didn't quite hit the second limit and pulled back up. Now we've just been kind of dancing around here throughout the day. Now, the reason you need to understand where limits are and how limit moves work is because let's say you bought the S&P because you go, oh, well, we're limit down. And a lot of traders will go, well, we're limit down. I can just buy it because the only way it can go is up. Well, that's a terrible idea. Because if you're limit down and you buy it, then you will not be able to sell to cover your long. Okay, and what can happen is, even if you have a stop in here, is it does just this. It gaps down and locks limit again. And then you're taking the maximum loss, and you will not be able to get out of your long if it stays locked limit once more. And it can gap again and continue to gap down to limit, and you continue to take maximum loss and are unable to cover your position. Okay, so be very careful, especially with these high volatility markets and this period of crazy volatility that we're seeing here and everything. Be careful and understand where your limits are so that you do not get caught on the wrong side of a limit move. Now, if you are short, which I know many of the traders in the trading room held their SPY shorts over the weekend, those played out beautifully. And this is kind of like best case scenario if you're short, because that's as much money as you can possibly make on the day at that time. All right, until the limits increase. So my point here, though, is be aware of where the limits are for the markets that you're trading. Understand how they work. Now, this is not just for futures. There's a limit of 7% for the entire stock market. You saw the markets halt this morning for 15 minutes when we went down 7%. And you see that happen all the time when we have crazy volatility like this. So be aware of where the limits are, how they work. Don't get caught on the wrong side of the limit move. And I know there's a lot of traders out there that try to pick bottoms and tops like this, and this is why you got to be really careful, because worst case scenario, you can see markets go limit and then gap limit and then gap limit and gap limit, and you cannot get out of your position. When you finally can, you've blown up your account. All right, so caution with limits, understand where they are for the markets that you're trading, and just don't go against a market that's just about limit down, and don't go against a market that's just about limit up. All right, but that is going to be it for today, everybody. I hope it helps. Once more, don't forget to like and subscribe, and stay tuned as we continue to navigate these crazy market environment that we're trading in right now. But that's it for now. And until next time, happy trading, everybody.